Okay, I think we're there. I think we've landed, Evan.
Hey,
All right. All right. Awesome. Okay, we're here. Hey
perfect.
guys, just give everybody a second to get on here, and then we will start. Always jump in. Make sure you're following Evan and I, of course, on our profiles. And Evan, you have a business page too, right? We
I
can
do.
link that down. We can
Yep.
link that down here later on. But if you follow us here, this is where we'll be starting each week because it alerts you guys. Um, okay, so today we're going to be talking about this is Mincolla Group Live, second episode. Sorry, we're 10 minutes late or so. But Evan and I wanted to this week was going to be on the Phoenix metropolitan housing market and kind of some tips and trends to go along with that and what the stats mean to you. So we're just rattling off a bunch of stuff. And right now, it looks like sales are up about 10.2% from April of 2017 to this year. So I don't know about you, but that's a big jump to me. I mean, we're talking big sales numbers there. And 10% less inventory, which is really driving that, along with what have been lower interest rates, right? Higher high buyer demand, and low inventory, right?
Yeah. Yeah. So, I mean, we've definitely seen an upswing on interest rates, but I think that's helped cause a sense of urgency. So, with
Yeah.
that 10% increase in price, 10.2% is a huge deal. I mean, that means someone buying a $300,000 home last year is paying about $330,000 more now. That's $30,000.
Right.
Which, that's where the statistics come in, where homeowners are about 10 times more wealthy than renters. And a lot of it's because, you get to take advantage of appreciation, paying your own mortgage and all that. So
Right.
it's been an interesting market for sure.
So, and another thing that we're looking at is basically we're looking at about a 2.42% in our inventory month supply. So last year we had about 24,000 homes on the market. This year we're looking at about just under 22,000 from last April to this April. The stats will be coming out for May here shortly from Armlist. That's our tracker here in town. But basically, if everything were to sell and nothing else were to go on the market within 2.4 months, everything would be gone. There would be nothing for sale. Usually, in a healthier market, we like to see at least double to maybe a little bit, even a little bit higher than that. So we're at a really low inventory right now. So Evan, on that point, that really puts us in a seller's market then. But like you said, with the interest rates being low and so many different down payment assistance programs now that are available to home buyers, and
Right.
creating that sense of urgency, like you talked about, with rates going up and
Right.
prices going up, it's really got buyers out there in the market, right? You see a lot of people
Yeah.
out in the market. Not so many refis now, but a lot of people trying to move up.
A lot of people are getting off the fence. There's market, so you'd think, oh, why is it? It's not a good time to buy, but it really is a good time to get in. Interest rates have been on the upswing. Home prices have been on the upswing. The nice thing is once you're in a home, if you have the ability to refinance down the road, you can. But I have a feeling people getting into homes nowadays won't be refinancing and they're going to be keeping their mortgage long term because they have been on the upswing and they're continuing to go up. The highest we've seen them lately was the week of May 17th, so the week before last. The average interest rate was 4.61, and that's the highest it's been since 2011. It's still near historic lows, but I think people are saying, "Hey, interest rates are going up. I was just waiting around. Now we got to get off the fence." And honestly, that's what a lot of my buyers are. And part of it's loan programs too. Like you said, we can talk about that a bit later. But
Yeah.
um, it's becoming very important to have a professional realtor and a professional loan officer on your side in this competitive marketplace. It's not just, you can't just take your time while looking at homes. You can't just take your time while submitting offers. And if anyone, is working with any subpar real estate agent or lender, you could potentially not get that house of your dreams because of that. So, do you agree,
Yeah.
Chris?
Yeah, a lot of times, we run into people, and it's understandable, like people that they know that are in real estate or whatever, and or whatever, family, friends, coworkers, but a lot of times they're not full time in the business.
Correct.
And I don't know how you could be a part time agent and really service even one client, let alone more than one per month even. And we
Right.
usually have several per month that we're servicing, and we work hand in hand with Evan, so it makes it a seamless process along with our title company Magnus Title with Laura Bethel. She's fantastic as far as taking care of all of our escrow services. So between her and Evan and my wife and I and our real estate team here, it really makes everything seamless. It's kind of like, you know, when you've had a basketball or football team together for a while, they work together. Sometimes you put a bunch of all-star players together on a team, but they haven't worked together before. It doesn't always go seamless. So it's not only having the best person, but also that team together. So I can say that we honestly have a really seamless transactions here. Um, and when it's Evan and Laura, we don't worry.
Right. So when you're, and I see this, but obviously you're out, I see more of the contracts when they come in and they're accepted. So if you're showing a client a $180,000 home or $200,000 home, which is, the average sales price is actually, the median sales price is actually closer to 250. So anything under 250,
Right.
if it's well priced, I mean, how quickly are those homes going in this market?
Anything that's under 350 or 300,000 is really, it should be, if it's marketed properly, priced properly, it's usually gone with a matter of days. It goes under contract. That's why we always tell people, one quick pro tip would be, you know, get out there and look at properties on Tuesday or Wednesday if you can. Especially if you're in a lower, like under 200,000, under 200,000 or so. That's a really tough market for single family detached homes right now. They still do exist in the far east and far west valleys, but it's really important to get out there at different times of the week when most people are working or can't get out to look at homes. So if you go out on a Tuesday or Wednesday, it's a great time to kind of beat the rush from the weekend. Um, and it's really important to be prepared, have that pre-approval done with a lender, and get a buyer consult with your realtor to go through the process from beginning to end. So later on, there's no surprises. Oh, I didn't know this, I didn't know that. Make sure you go through the buyer advisory guide if you have any questions that we give you. It's an Arizona buyer advisory guide that has all the official links there that
Right.
we use along with our consultations to get you through the whole process. It's really important. Wouldn't you
Right.
say,
And
Evan?
unfortunately I do see it because I work with, I see a ton of different real estate agents. I see a ton of different borrowers. But unfortunately I do see clients that are losing out on homes, because because them or their agent or a combination of the two are not very quick to get out there.
Yeah.
I know you guys are really quick. Property hits the market, you're sending it to your client as soon as possible. If they want to see
Go,
it first
go,
thing in the
go.
day. Yeah, it's almost like that. And I'm not sure, sometimes when you take a look at properties, are there other realtors there showing it at the same time, or
Yeah,
not sure?
yesterday, just as an example, yesterday we were out with a client. We put an offer in yesterday with a client of ours, and it seemed like just about every home we were at, there was someone right behind us or right before us looking at the same house.
Right.
And we see the same thing on our listings. We try to do a lot of open houses and stuff to get people through as fast as possible. But we've got showings going all the time, and it's really important to make sure that you're watching that portal. We try to also, obviously, but we can only recommend. We have to go off of what you're going to like, and in the end, it's your decision on which house you're going to like. So it's really important to make sure you're keeping up on that, and we have everything ready to go from the get-go, from the very beginning.
Right.
In this market, it's really tough to wait around and think very long. So kind of have it straight that you know what you're looking for, and you're prepared to go out and get it.
Yeah, no, completely. And you guys, along with some other agents, but you guys specifically do a lot of things, to get those offers accepted. One, like you said, you're out at the properties quickly. Two, you're making sure the offers are there. Three, you're making sure the lender's following up like me, with the listing agent. You guys are being professional with the listing agent. There's certain things that you guys put in the contract to help get that contract accepted. And you're just, overall professional team. I think that's a big a key thing is you're full-time professional realtors. And the listing agents can see that, who then relay it to the seller. And you guys are just beating out, other people that might work a 9-to-5 job and trying to see it after. So for sure.
Yeah. One of the things that we run into a lot, especially the last, now in the last year or two, and it's understandable because of the way the low inventory, high buyer demand with technology, and the way things are going. We have some I call them discount brokers, or little flashy things that try to entice people to come in, but really they're kind of nothing different than what's already being done in a lot of ways, or available to us. For instance, you may have some people out there, and it's really something that we do anyway. A lot of times, most of our buyers, we get a lot of closing. We get the closing costs taken care of, or a majority of the closing costs paid for by the seller. Evan helps us work those numbers in also, and typically that can be, percentage wise, what are we looking at there, Evan? What would you say on a home purchase usually?
For closing costs?
Yeah.
So that's, hi CC, real quick.
Hey,
glad
CC.
you're joining us. But as far as closing costs go, that's something, because I do get lots of agents that tell me in this market, oh, it's such a hot market, there's no way we're going to get the seller to pay us closing costs. When in reality, more than half my deals have closing costs in them, negotiated by the realtor like you. And most of those times, those closing costs are at least 2%, sometimes even more than 3%. And, when I've bought homes, I've never used a discount agent, but that's because I want full-time professional service. That's because even if they're willing to chip in $1,000 or $2,000 or whatever it is, that is so small in the scheme of things. And I see you guys day in, day out get $5,000, $6,000, $7,000 for your client towards closing costs, which makes a big impact to their bottom line. So you guys do a great job at negotiating.
Thanks. Well, it helps when we have.
Like I say, it helps make my job easier too. It definitely so many options open.
Well, when you've got a solid pre-approval letter that's got all the boxes checked, that you've got their paperwork and those sorts of things already collected, which makes such a difference. And it's not coming from a bank, which I want to talk about in a minute too. It makes a big difference. So, with that, Evan, can you maybe, let me just mention this first. So sometimes we'll have, people that get enticed by, getting money back from the buyer's agent or a discounted sales listing with different brokerages and stuff. And that's how it's advertised. And, it's to get people through the door, right? We'll give you money. But in the end, it really comes down to what we're really talking about is, are we negotiating a good deal for you? Are we getting you those closing costs? And am I a part-time agent or a full-time agent? With a lot of these companies, you're getting literally professional door openers. And it's somebody that you'll see once to go open a door for you, and then you don't see him again. and they're not part of the transaction from beginning to end. And that's, that's super important when you're looking at, probably for most people, one of the biggest purchases in their lives. We want to make sure that they're well taken care of from beginning to end. Cindy and I, it's really important for us to, service the client and make sure they're well taken care of, even though sometimes they can't understand why they need to get you so much paperwork. But we're doing it. It's kind of like if your kid's getting ready to touch the stove, you don't want him to touch the stove, right? You want to make sure that he doesn't get hurt, and that's right. All we're trying to do is do what's best for our client, make sure we've got all the documentation up front, and make sure that we're servicing you from beginning to end full time, not a professional door opener. And you talk to somebody up front that talks you into it, and then you've got 4 other people, depending on the day or the week, showing you a property, and you can't get a hold of anybody on the weekend or evenings. So, we hear it time and time again too on listings. We never hear from our agent. We never heard from our agent. When their house didn't sell, or they weren't happy with the deal that they got, or whatever the case may be. So,
so on a high level, to recap, this market is very hot. 10% increase in price since last, just 12 months last year, and it's not stopping. Low inventory, and it's just very important to work with a professional realtor and professional loan officer to make sure your offer is getting accepted, because you are going to get beat out. And I do see people that, they were working with one lender, one realtor, and now they're working with us. And hey, all of a sudden their offers are getting accepted, and it's not, it's not magic. It's hard work. So, and everyone just always needs to understand the market. And on my end, understanding the different programs too. So there's a lot of new programs, everything from down payment assistance to jumbo luxury loans. New loans that are out there that, if you, for some reason, you weren't qualified last year, you might be qualified this year. I do have a handful of people, probably about a third of the clients I have under contract right now, wouldn't have been buyers a year ago because newer loan programs coming out. Nothing crazy, but, small changes here and there where, they weren't qualified and now they are. So that's been great.
And real quick, while we're on that subject, people who may be on the fence about buying right now versus waiting, and even though they could qualify now, when we look at that 10.2% in sales price from last April to this April, and we look at the interest rates where they were last year to this year, what does that mean, like in a payment, or in the end result of a loan, Evan, whether it's FHA, conventional, whatever? What does that mean?
Yeah, literally $30,000 in a mortgage, I'll do some quick math here. That ends up being about $150 in your payment. Wow. Let alone, let alone an interest rate changing. If interest rates change, from let's say 4.5 to 5.5, then you're looking at closer to, what would that be? Just over $200 a month in a monthly payment.
Okay.
So that's $200. And, once you're in a home, I think it offers more flexibility, because if today's rates are great, good. If rates are better in a year, then you can refinance potentially. So I think a lot of people want to wait till they perfect their credit or whatnot. But really, I've seen a client today, or let's put it this way, a client 6 months ago with a 580 score potentially got a better interest rate than someone with an 800 score today.
Right.
So that's, to put in perspective, it doesn't always make sense to wait. Sometimes it does. If it's a month or two where I might say, hey, we're going to jump from a 580 to a 680. It's going to help you save a ton on your mortgage. You're going to have those low payments going into the mortgage. Great. But it doesn't always make sense. And that's where I'll help you compare buy versus rent. If you're going to be there 6 months, a year and a half, it just doesn't make sense. You guys should rent. But that's where we come in and really do the full in-depth analysis of, hey, is it a good time to move up if you already own? a lot of people want to do that before interest rates go too high,
Right.
and take the equity out of their current house and put it on the new house. Or if you're renting and thinking about buying, I know there was a stat. I think the average rent rate is, let me pull it up here. It was like $1,400. Yeah, the
Yeah.
average lease was 1567.
Right. Sounds about
In
right.
April.
Yeah. Yeah. That's
You
it.
know, that's that's up just in the last 2 years. That's up several $100s.
Yeah.
So that's the nice thing I love is I have my mortgage payment, and I know that's what it's going to be next year. I don't have to worry about a lease renewal with an increased costs and whatnot. So for me, it offers me stability because I know I'm going to be here for at least a couple of years.
And guys, just to put it in perspective, the average sales price, you talked about 10.2%. It was at 254 April of 2017. Again, 254 this year, 322. So, I mean, you guys do the math.
Well,
And then you put the interest rate on there. I don't know if you're going to be able to really outpace that. I don't know. I'm sorry, 292 to 322, and
yep,
292 to 322, and then you add on the extra, what, about 1% since last
interest
year?
rate?
Yeah.
Not quite, but yeah, at least 0.5% for most clients, which is a lot of money. So
Right.
we got a little relief last week. Interest rates dropped a bit,
Yeah.
and I locked everyone in that I could. But this week they went up again. So, they will have these small things where they go up and down, but overall it is an upward trend. Where I say, hey, if you can get into a mortgage now, that's great. Lock that rate in. And I'm pretty much doing 30-year fixed rates. I've done 2 adjustable rates in the past couple of years, and those are very unique situations. So
Right.
we're not talking about any weird loans either.
Yeah.
But yeah.
Cool. Also, right now, a big trend besides the discount, professional door opener type of situation or whatever, is the investor offers. We're hearing a lot about that. Not that that's anything new, really. It's just kind of how it's been marketed, which has been done very well, actually. And we work a lot with those people whenever we can with those companies. For instant offers online or local. There's even a couple of local companies here that do that, if not several big names that are even nationally known. But the companies that get the instant offers to sellers, usually what our experience has been is it's certainly great for certain situations, right? So certain people who just maybe they have a property they haven't been able to unload, maybe they don't even live there, they just want to get it unloaded, or it's a probate situation, or or they just don't want to put the work into it to get it up to snuff, so to speak, or they need to just move right away, and they're not too worried about the equity. We had somebody yesterday we talked to, our team talked to, and they just had twins, 5-month-old twins, and no more. We just had to take a break, and they canceled the listing. They also said, they didn't get serviced very, very well from the realtor. They really didn't have any offers come in, but they felt like they just needed to take a break. It was too much with the 5-month-old twins. So maybe even in a situation like that, we can get them 2, 3, 4 of these investor offers. But the thing is with those is usually a lot of times you're seeing additional fees on top of what traditional full-time lender, or I'm sorry, professional full-time realtor would even charge.
Right.
And you're looking at probably what would you say, Evan, 20 to 30% lower than market value typically? Maybe if you're lucky, 10%.
Yeah, exactly. And the nice thing that I've seen you guys do is you guys are able to work with those groups, and you have even more investor groups that you give your clients both options, and you compare them side by side. So that way the clients can make a fully educated decision of, hey, do we want to take an easy investment offer and not worry about selling, or do we want to actually go through the process with Chris, which actually isn't that bad?
No. try to make it pretty painless.
Yeah.
And the nice thing is we can still represent you even with those instant offers or investor offers. We can still represent you as the
Right.
seller. So you're still protected. You're still, when we say protected, a lot of people don't think about this, but I think the last stat I heard is about half of all the for sale by owners end up in some sort of arbitration or litigation. And usually, I don't know about you, Evan, but if I go into the MLS and I look through non-MLS sales versus regular MLS sales for comparable sales, usually the non-MLS are super low, and I can't even use it for a comp. I mean, it's kind of ridiculous what they go for. And a lot of people think they're saving money, but in the end, they're really not,
Right.
because we could have gotten so much more for the house, because it's just about exposure, right? The more people that see the house, especially the people that can actually buy it and qualify and have the money to, and that's what we target and go after, of course. So did you have anything else to add to that, Evan?
No, I mean, it's a changing marketplace when it comes to lending, when it comes to real estate, that it is important. And I see some people that they've been in the real estate business for 20 years, but they don't keep up and they're not super active in the market. That it's a completely different marketplace. That if you're really trying to represent your clients well and understand what kind of loan programs are out there, which is my full-time job, understand who these investors are, understand why buyers might care about the Zillow estimate, even if it's not accurate. Understanding all those different things, understanding Open Door, OfferPad, they're big. They're big institutional investors, but I know what they're doing. These institutional investors are making an impact in the marketplace. So it's not about you versus them. It's about being educated and making sure you present the right client, right options to your client in this marketplace.
Right.
So,
yeah. And with us, we practice limited law. I would say, is how it's put. It's per the contract, obviously. But the great thing is with our team, my wife's got 25 years of paralegal experience. And so that's why usually she's handling all the contract stuff exclusively on that side, because she's so good at that and super attention to detail on that. So when you're getting us, you're not just got someone who, again, part-time, went through school, some continuing education, and that's it. There's, at least for our team, there's a lot more value there that we're bringing. So, Evan, do you have anything else on the discount brokers that you want to add there that you've seen on the lender side?
No, not necessarily. I mean, I deal with a lot of people. Like I said, there's realtors that tell me that they can't get closing costs in this market because it's so hot, and yet in my pipeline, more than half my clients do have closing costs from the seller. So it's just, some realtors aren't willing to work as hard on behalf of their clients.
Right.
And that's where I see that come into play, where it does make it more difficult. I know many times, not all the time, but many times when I deal with a discount broker, it's going to be more headache for me. There's going to be a higher chance of the deal falling apart at some point. So.
Yeah. What I've also found with those offers too, they're actually really strict when it comes to the inspections. In other words, they'll send out an inspector, they'll send out tradesmen, and what we found sometimes is, sometimes with the tradesmen, any little thing, the water wasn't turned on when they checked the dishwasher, so we need to replace the entire dishwasher. No. and this is where my wife and I would come in, and we're like, wait a minute, let's go take a look at the dishwasher for a second, and we actually physically, not that we're inspectors or whatever, but is the water turned on? Is the valve on? Those sorts of things to just know. We don't need to spend $600-800 on a dishwasher, or the seller doesn't. So to get the deal done. So anyway, I don't think I think that's really it for the market update. Did you have any other trends that you're seeing, Evan, that we needed to bring up? I mean, with the closing costs, you're absolutely right. I mean, that's why we really ask for a really detailed report from you, so we really have a good overview of what's going on with each client, and make sure when we go out we understand exactly what they can and cannot do. For us, it's it's really important to look at the back end of that property, so to speak, to make sure, for instance, FHA has a rule. Offer pad, open door, an investor comes in, whatever, to flip a property, and it was just bought last month. FHA buyer can't get approved for that, right, for 90 days because it was bought a month ago or whatever. We took somebody out yesterday who there was a couple properties like that. We didn't waste their time looking at them. In other words, or trying to put an offer in on something that's not going to stick. And a couple other things that I would say come into play too that people don't think about much is HOAs and solar leases. I want to just touch on that real quick, Evan, because to figure in insurance and taxes into the mortgage payment, but there's also those two things. So that's kind of a little bit of a trend now with more and more people going to solar. And
yeah, so I mean, any client that's worked with me before, that mortgage companies qualify you based on the payment, not necessarily the amount. So, if you're not the high end of your qualification, I might just say, hey, you're golden in your price point up to 300,000, let's say. But let's say you're really at the top end of your price point and you're only qualified for 250, and you're really looking for the biggest house you can afford. For some reason, you are at the top of your qualification. Well, if you find a property with $150 HOA, that decreases how much home you can afford by about $30,000.
Right.
So they take all that in consideration. If the leases are owned, if the solar is leased versus owned, there's different guidelines. If it's FHA versus conventional, it's a loan program, it's different guidelines. But it's an added cost. Hopefully it does save you money on electricity as far as the solar goes. But we do need to take that into account on our end, because at the end of the day, it's an extra payment that you're going to be making. Same thing with an HOA.
Yeah, and we see that a lot, especially not only with single-family homes, but condos or townhomes. That sometimes these condos, they're beautiful, they're great, they have a lot of amenities, or maybe not, but their HOAs are just through the roof. I mean, we're talking, even here in Phoenix, 2, 3, 4, 500, 600, even for a small complex. Some of the downtown ones are just even more. They're even more. I mean, it's just crazy.
Oh yeah.
But they're beautiful. I mean, you have everything there, and it's a secure building and everything, but that all has to be figured into the loan. And that's quite a bit extra they need to be able to qualify for.
Right. Yeah. And it's all personal preference. I have an HOA. Yeah. I don't mind it.
Right.
I think it's well worth it, but some are pretty pricey where you don't get necessarily the value, but all complete personal preference.
On a lighter note, I'm actually president of our HOA now.
I don't know how light that is. No.
It's a whole different experience.
Well, cool. That's good to hear.
But anyway, I think that's about it, Evan. Do you have anything else you wanted to add, or anybody have any questions they want to chime in with? I don't think we have any questions on here. If I'm working this thing right, I'm still getting used to this. Sorry, guys, about the delay again today. Evan, how do they get a hold of you if they have any loan questions, and what's the best way to get started?
Yeah, again, Evan Einhorn here, Modern Home Lending. You can reach me at 602-456-2273. Again, 602-456-2273. You can also go to our website, modernhomelending.com. You'll find some information about us. One of the nice things that, we literally do have tons of loan programs. There's a lot of newer loan programs out there, and we don't charge processing or underwriting fees. So just a nice quick bit to help, helps make the transaction easier in today's market. So,
awesome.
What about
awesome.
you, Chris?
And you can reach us on our team line. You can call or text us at 480-788-8569 to reach Cynthia and I and the Mincolla Group at West USA Realty. Also, you can check us out at mincollagroup.com. That's MINCOLLA group.com, or mincollahomes.com. And we'll be back again next Wednesday at 1:30. We are going to be putting this on YouTube, so be sure to follow both of us on our Facebook, on our regular Facebook pages. You can also see this shared on our business page, and eventually we're going to be live on YouTube. We're working out a couple of little details with that, but we're going to be sharing this on our YouTube page also. So you can subscribe there. That would be great. So make sure to follow and subscribe with us here on Facebook and YouTube. All right, great.
Perfect. Thanks, you guys.
Thanks, guys. We'll see you next time.
Bye.
Oh, and I'll add some links here for you guys too. Thanks.